Hi, hello. It is nice to meet you all today, and we are starting our new educational channel today, in which we are teaching financial accounting subject, which may help for the students who are following the A levels, who are doing the A levels, AAT, and Chartered Foundation level, and BCom first year. Okay, so in today, without talking any other subjects, we can let us move on to the lesson. In today's lesson, we are going to see, because I am going to teach you all from the scratch to the advanced level. So first of all, we want to see what is the accounting. You would have thought, what is the accounting? Why we should do the accounting? Lot of questions would have arisen on your mind. So today we'll see what is the accounting. Okay, what accounting process is recording. Accounting process is recording, classifying, and summarizing the financial data into meaningful format. That means recording, classifying, and summarizing the financial data into meaningful format. Recording means recording in the books of accounts, right? Books of accounts. That will I will later on I will explain to you in detail. To have a small knowledge, I will explain in short. Recording means recording in the book or set of books. Okay, classification in this sense, lot of data you would have gathered, lot of transactions you would have gathered during the process, so you had to classify under which accounts it has to go, like that. So that is means classifying. And summarizing means all the expenses under each account heading, it will be summarized. Okay, summarizing and financial data into meaningful format means the company at the end, it will summarize the uh, accounting data and transactions recorded in the form of balance sheet, profit and loss account, and cash flow statements, etc. So that is the meant by the meaningful format. Balance example, balance sheet, and profit and loss account. Okay, so you would have got a rough idea about this. And thereafter, what is the objective of carrying out the accounting activity? The objective, communicating of economic information uh, about the entity that will enable interested stakeholders to take decision based on the information provided. Okay, so that means communicating means we are informing the economic information about the entity that will enable the interested stakeholders, the people, unknown people. Some people are unknown people and some people are known people, right? To take some decisions based on such information. They will take some decisions. Some people, if it is a statutory board, it will look that information in different way. If the investors or somebody, they will look at those informations in different way, such like that. In under next heading, we are going to see who are those stakeholders, interested stakeholders, I mean, like that. So here, interested stakeholders, who are they? First, we will think about owners or shareholders or partners of the entity. There are different type of entities are there. We can discuss in different in subsequent lessons, right? So owner owners are represented by the proprietorships, and partners are represented by the partnerships, and private companies and public limited liability companies are represented by the shareholders. Okay, so those people are interested in financial statement. Why? Because they have invested their money, hard earned money. So they want to know the whether the invested money had made some income or returns, valuable returns. So if that is not a case, they will have to look after the alternative actions. So because of that, the owners and shareholders need the financial informations. Second one is management. Why management? Management is not, you may think that management is nothing to do with the accounting informations. No, management has to concentrate on the accounting information, because based on the accounting informations only, the management used to plan is future activities. The planning about the future activities depends on the past performance and past planning. If they have, if they have had any planned activities in previous financial statements, and if it was successful, if it was successful, then okay. If it was not successful, the management has to look into the reasons why they could not able to achieve the planned ac- goals or other things. So they may rectify those things and plan the future plans. So for that, they need the financial information. And another thing is third parties, employees. Why? Next to the management, employees, because employees may, if the company is running in a profit, they can come to the assumption that company is stable. Okay, if the company is stable, then their job is also stable, and they can get salary increments, benefits, mm, incentives, and etc etc. So that employees also, because of those reasons, they also want to know. And next person is government institution. Government institutions in a sense, some government banks and Indian Revenue Department, those are, they are interested in the finance station. Mostly the Inland Revenue Department is for Inland Revenue Department, the businesses has to submit their accounts. It is the statutory requirement before the stipulated um, period time period. Okay, so government institutions, for that example is that. And customers, why customers? Because customers want to know whether the company is running in a profit. Then if it is running in a profit, then uh, they can go with the purchasing with the current company. If it is running in a loss, then they have to see for the another supply for them. Okay, customers and creditors and leading institution. Creditors, because creditors want to know, because creditors, if you say A is the company, okay, these are the creditors. X, Y, Z are the creditors for an example, right? If the A is performed, the X would have given a loan, I mean a short loan, term loan, uh, and we would have given a loan, and third Z also would have given a loan. If the A is performing well, then X, Y, Z come to the conclusion that they can get the amount granted or credit granted to the A, right? If it is not performing well, they have to come for the assumption that it is doubt for the recovery of their credit amount or short-term loans granted to A. For that purposes, creditors want to know. Another one is leading institution. Who are the leading institutions? I mean, banks and financial institutions. Because when the company is expanding, or if the company come across any liquidity problem, it will go for the uh, borrowing from the banks and financial institutions. At that time, the financial institutions and banks will ask for the financial statements. So because of they want to know before granting any loans, whether the company is running in a loss or whether the company is running in a profit, and what is the reason for the loan requirement for the loan, and whether the company has the repayable capability. Okay, for that purposes they need the financial statements. And potential investors, who the potential investors, if you say the company A is performing well, for an example, okay, so it is very prominent in outside the Sri Lanka and inside the Sri Lanka, the company A, right? Gradually it has grown and growing. So out the investors in uh, outside the Sri Lanka, inside the Sri Lanka, will look for the opportunity to invest in the A, right? So when the time comes, when the if the company A issues any shares or borrowing, if the company required for the investments, then at that time those investors will come and invest in the company A. For that purposes, potential investors are interested in financial statements. So today, as a first lesson, we are concluding this lesson, and I hope you would have understood. Okay, thank you. We will meet you in next lesson. Don't forget to subscribe my channel.